Hello, everyone, and thank you for tuning in. Today, we're gonna do something a little different. We're gonna be looking at correlations, and how you can use this to your advantage, um, navigating market cycle tops with Bitcoin. This is just going to be for an example to kind of bring a lay of the land. So what I've done is I've taken the price of the Dixie in Bitcoin for the past 10 or so years, like 9 years, back to June of 2012. And I mapped them together. It's represented by the price in red is Bitcoin, the price in blue is the Dixie. And I tried to find some correlation. And so now you can see here at the figure here, correlation 0.2308. What does that mean? Well, this is the correlation coefficient. It can help determine if something's strongly correlated or negatively correlated or not correlated at all. And the range is between -1 and 1. 1 being strongly or extremely correlated, and -1 being negatively correlated. So an example here for the narrative of the Dixie in Bitcoin is if the Dixie drops, like what we see here, if the Dixie drops, the dollar weakens, then the price of Bitcoin should go up, right? That is what we call a negatively correlated relationship. And so, therefore, with that said, it should be closer to -1. In this case, it isn't. It's 0.2308. It's nowhere close to being strongly correlated, which is anything from 7 and up, and nothing, and it's not close to -1 or strong or a moderate or strong negative correlation, which would be -7 and 1. It's symmetrical. And so, with that said, no, the Dixie is not, for the past 10 years, is not negatively correlated with Bitcoin's price, unfortunately. Sorry to tell you that. Anyway, let's move on. So this is what I kind of wanted to debunk. First of all, the Dixie and Bitcoin, no, they're not negatively correlated. At least that's what the data shows. And what's I'll do a bunch of other charts like this, but it's fairly easy to do on Google Sheets. So and yeah, so it's all I need is just the daily price of whatever, and I can get it. So probably in the future I'll do more like S&P, see the correlation between there, correlation between other assets, or if they're negatively correlated, who knows? In any case, here we move on to Google Trends and Bitcoin correlation. So I thought, how can we, figure out a way to find something that's correlated with Bitcoin? The greatest one would be Google Trends, right? The how many people have searched for Bitcoin, at a certain time frame in relation to the rest of the times being searched. And so obviously, if the Bitcoin price goes up, more people are searching for it, more people are talking about it. Therefore, it has a high correlation or moderate correlation. It's at 0.6723. It's not at 7, but it's pretty darn close. And I would say there's some moderate correlation between these. Obviously, the more interesting factor would be, can this help us define market cycle tops? And I think it can. Now, let me explain on how Google Trends works. Okay, so because it's a little confusing. Google Trends is a measurement between 1 or 0, I guess, 0 to 100. Okay, kind of like the fear and greed index. It's only measured from 0 to 100. Google doesn't give us the raw numbers of the amount of searches given in a certain country or worldwide, probably for privacy reasons, and it's not something that we could easily obtain. So they give us this relative number between 0 to 100. Now, what does that mean? Well, you can see that 2017 December was a Google Trends rated at 100. Um, that will stay at 100 until there is a new data point that exceeds the number of searches than December 2017. Okay. If you go on Google Trends and just did a data range of Bitcoin, the hits of Bitcoin between say uh, uh, 2015 August of 2015, and the inception, you would notice that this data point here, when Bitcoin was at $800 or so, the opening price was $800, that this was the 100. That was the relative 100. And so the Google Trends will constantly change whatever the 100 is as until to the point where that becomes the new 100, if you understand what I mean. So this was the 100 before this was the 100. Now this is the new 100 to beat. We are yet to be there. But let's take a closer look. So if 2013 was the prior 100 on Google Trends, that was that was around 10, around 13. So that means it was around 2017 of July or June where we matched the same amount of hits as 2014. So these two data points here would have been the same at both near 100 at that time. My guess is, my theory is obviously it dipped up, but it continued to go up. As soon as Google Trends starts putting in new all-time highs of hundreds, makes it, or Google Trends starts printing new data points that are exceeding the previous data point that was rated 100, this is the time span where you can consider selling Bitcoin. If you were to do that, so Google Trends at 15 at August would have given you a price of about $4,000 between 12, 20,000 between and $13,000. I'm not doing highs, I'm doing opens. So between $4,000 and $13,000 is your time range or price range of selling your Bitcoin. You would have had 1 month, 2 months, 3 months, 4 months to liquidate your entire position of Bitcoin, and you would have had a pretty good profit should you have bought somewhere in the bottom of, say, $200 or so. Okay. My understanding of this and how I would implement this in an actual strategy is that understand that you cannot necessarily time the top. You can't. It's impossible. However, you can use charts like these, you can use indicators, you can use the RSI, whatever you want to help narrow the region of selling, right? You narrow the region of 600 to 13,000 to 4,000 to 13,000. Okay, that would be like a smaller gap for you to start selling, which is it'll be more accurate in that sense and more closer to the all-time high and to the market cycle peak. So in this case, this is where like averaging out your sells becomes, quite important, right? You can see that even if you started selling here, you could have sold the smallest percentages of your Bitcoin at this point, and the further it comes up, increase your sells, increase the amount of Bitcoin you're selling at each time per month. You can do it on a monthly basis. So that is one strategy. Another strategy is you could just wait until it creates the new 100 and then you see the one instance it comes down. As soon as it comes down, like it did on the 1st of January, sell your Bitcoin. Like that's it. Like you could have just sold your Bitcoin and you would have sold it at around maybe $10,000 to $16,000 in the month of January. If you look back to Bitcoin at that time, you could have sold it at any point between 17,000 and the low of $9,100. Like that would have been the range that you could have sold it as. And that, in my opinion, if you bought here at the bottom at $200, that is the top. Okay, that is it. It is a big range. I'll give you that, but it is the top relative to the bottom. And so with that said, Google Trends can be your friend in that sense. So let's apply it to current price data. Right now, Google Trends is at 31, obviously because the price has gone down. But we have not yet set a new 100. This brings back to my argument that this is not a market cycle top. This isn't yet. Um, if history is to repeat itself like it has done so twice in the past with Bitcoin, the market cycle top also correlates to Google Trends making its own new relative high of 100 on Google Trends. And so that is my prevailing theory. If you want to use this, okay, if you want to use this chart and use Google Trends to that. Now, mind you, I can't stress this enough. The idea is not to sell Bitcoin when it comes back to 100 because this is a relative number. Okay, it's a relative number. 5 years ago, 2014 Google Trends of Bitcoin, that was 100. But because 2017 happened, we have a new 100. And so this metric would have stayed at 100 for 4 months. Okay, so it's not necessarily sell as soon as it hits 100. As what I'm trying to say is when it hits 100 and starts making new hundreds, this is when you consider selling your positions. It's when you consider selling your Bitcoin positions. And you would have had 4 months in the price range of $4,000 to $20,000 to do so. And so $4,000 could be your smallest sell, followed by when it hit, maybe $8,000, you had another sell that month, so on and so forth, right? That is what I'm trying to explain. You can't time the top, but necessarily, but you can, uh, uh, dollar cost your sells up to kind of, average out of the market, which I think is the safest and the easiest way to do it. And I think this chart here can really help you with that. In fact, I find it very hilarious that, Google Trends is going to be the one to really determine the market cycle top. And and I find it impressive that every year you can see that more people search Bitcoin every single time. Another thing you can tell by this Google Trends chart is that the bottoms become higher, right? The bottom here is high. This bottom here is higher than the previous bottom, and this bottom here was higher than this bottom. So with that said, you could see that the progression is up. It kind of does look like Bitcoin, what Google Trends looks like, which is fair. But this is a tool that you can use, and I think this is a very fascinating tool. As soon as Google Trends starts making new relative hundreds on Google Trends for Bitcoin, start selling. Just just start selling. Like dollar cost your sells out on a month to month, on a week to week basis, whatever you want to do. But this is a pretty interesting indicator. I do so say so myself, and I'm pretty impressed by it. Anyway, that's all for today, you guys. Thank you so much for watching. Take care. Bye bye.